Morning, everybody. Welcome to our workshop for the start of the week. Just a quick review of last week. FTSE 130 up to just over 2% down, 246 points up, 1.8. S&P 17 points. We closed above 1500 for the first time, as we'll see on this chart showing here on the screen, since really the very last part of 2007. So a significant move there. And you can see this is actually the weekly chart of the Standard & Poor's 500. So this is the broadest and most widely followed index in the United States. In fact, it's the largest index in the world by market cap, targeting 1560s really on the weekly chart. Having reached a psychological level, there's a possibility it may pull back, but risk on is very much the mode at the moment on the markets. Equities up, bonds down, dollar down, commodities mixed. Generally, data has been quite positive in the developed world. Here we're looking at our calendar for the week ahead. But just before I do that, we can just review what happened last week. The German surveys, ZEW and IFO, are a lot better than expected, giving us further encouragement following what was fairly disappointing Q4 data in GDP data in Germany. United Kingdom, what happened there? We had a GDP number for Q4 GDP, a very big disappointment for the markets, although the picture is not one of an economy that is in dire straits. It's just bumping along the bottom. I think there is a view that the GDP is prone to revisions, and we've noted that already the first two quarters in 2012 have already been revised higher. And I think in light of the unemployment or employment data in the UK, which is we've got record number of people in jobs, although with the population expanding, the unemployment rate still remains quite high, although it has been improving. In light of that, it's unlikely that the GDP would have fallen as much as it has been reported in December for the last quarter ending the end of December. So that will happen. We'll see how that pans out in the months to come. But most importantly, it had a fairly dramatic effect on the British pound. The British pound against the dollar has fallen quite significantly. I'm looking here. Let's just get a daily chart here just to show you. A significant fall. Contrast this with the euro. The euro has been making great gains against the dollar, whilst sterling has been losing ground against the dollar. So in fact, sterling has lost considerable ground against the euro. But we're touching a key level here around the 157 level as we speak. I think it's likely that we might see a little bit of backing and filling, but longer term, I think the target is this sort of 154.70 area. So you can see what happened in the sort of July-August time when we had a sweeping move up from this sort of level that we're at the moment, all the way up to this pivot here, which was established from April last year. So that was quite a sharp rally, and this is the reason why we've seen this equally sharp fall, retracing all those gains, probably down to the fact that there's quite a bit of people exiting the safe haven, as it was described, of sterling when the risk, the euro breakup trade was prevalent last year. Anyway, that's what's going on there. The euro is pretty steady, as I said at the beginning of this piece, on the back of some fairly good data from Germany. Positive news from the long-term refinancing operation facility, where banks have agreed to pay back a whopping 137 billion, and that was announced on Friday. Longer term, I think the euro could be trading up anything up to as high as 137, but for now I think it needs to sort of hurdle this 134.85 level. Let's have a quick look at the euro against the dollar, and as we can see on the daily chart here that I'll just put up, I think it really is it's this sort of level here really around that 134 sort of 134.80 area, and it needs to hurdle that. Those levels last achieved over a year ago. Okay, Asian markets are a bit mixed overnight. Nothing really too much to report. Let's have a little quick look at the data. We've got effectively FOMC. Let's get our calendar here. We've got the FOMC out this week, which is the interest rate setting committee from the Federal Reserve, the US's central bank. We're not expecting anything there, given the policy changes in December, where they announced this open-ended asset purchase of 85 billion a month, and that's until the jobless rate falls to 6.5%. But the most important data this week is non-farm payroll on Friday. Been looking pretty good. I wouldn't be surprised if we see a revision to the previous number of 155. Before we get the unemployment data on Friday, we have a lead up to that from the ADP organization. They have their own non-farm employment change. That comes out at 1:15 on Wednesday. Can be a little bit volatile, but that'll give us an idea about what's going on. Initial claims on Thursday, that's another one important. Although it's a weekly bit of data, in the week of non-farm payroll, it assumes more relevance, but it has fallen sharply in recent weeks, which is probably more likely distorted by seasonal issues. But generally, I think we're looking for a fairly positive number from non-farm payroll. Thanks very much for listening. Good luck with the trading. We reconvene again on Wednesday morning this week. Thanks very much for listening. Bye for now.